May profits be upon you. This is RT Money, and welcome back to my YouTube channel. Thank you for spending a few moments of your weekend with me. And I just want to let you know I'm thankful for it. All right. I'll be even more thankful if you smash that like button at the end of this video, if you like what you see. All right. So we're going to do some top-down analysis on pound yen. Pound yen, starting at the weekly, what do we see? Let's just keep our eyes focused on what is relevant. All of this isn't relevant, so we don't have to keep going through all of that. What we want to know, what we want to see is that we've become very bullish here, a lot of momentum to the top. Price goes into a range here, and we finally, after all this time in this range, finally have a bullish breakout. So we are bullish on this time frame. Now, we want to also note there's a reaction here. Why is that reaction? Where is that reaction coming from? Well, let's look over here to the left. Okay. And we can see that we've ran into supply, weekly supply here. So let's mark that supply zone if I can. I don't know why I'm having trouble with that. Okay. If I can just get it together. All right. And we'll move that all the way over here to where we have the reaction. We are in a weekly supply zone. Now, we also want to make note, how valid, how good, how strong is this weekly supply zone? Well, let's make note of a couple of things. One, the zone has been mitigated already. All right. You see this wick coming up in here. This is a buy move to sell by market makers, right? And they are in those buys that it took initially, they're still in them. So as price is going down after they got into their sells, they're in profit on those sells, but they're in drawdown from the buys. And they have to come and mitigate out of those buys. You understand? That's what the point of mitigation is. All right. So we've come all the way up to the median threshold of this this order block. So that's telling you price is, this is now it goes from a strong zone of supply to a weaker one. All right. Is there any sell or buy orders still in here? Well, excuse me, sell orders in this supply? Is there any more left? Yeah, there's still some left. Let's refine this weekly to where this this mitigation point has already validated this this level. Okay, so we're at the candle body open for this this up move. All right, and I want you to also note that we have relative equal highs. This is going to be a magnet price. So this is giving me reason to believe that price definitely will this won't hold, and price is going to come and take out this liquidity here. That's the stop orders for people who took shorts. All right. And price is going to come back and get them at some point. Doesn't have to be immediately, but at some point it's going to get them. All right. So we're at the reaction point of this supply, this weekly supply here. Okay. And we already noted that we have broken, come on now. We have already noted that we have broken the consolidation bullishly. All right. So that's something that we want to take with us. Let's go to the next time frame, and we're going to refine here. We're going to refine this supply. All right. And where can we refine to? I think this would make a fine refinement right there. All right. At the opening of the last up move candle. All right. The last bullish candle here. And before we see this impulse to the downside. All right. And you can also see that there is a little imbalance between the top of this candle and the bottom of the up move candle where the open is, and price likes to rebalance what is imbalance. All right, so we're going to come all the way back over to where the reaction point is, and you can see even with the refinement, prices reacting to that daily supply. All right. And how much of a reaction can we expect? Well, this is what you want to make note of, is that, again, we have a higher time frame breakup structure, so we are bullish, but that's not the only thing that's happened here. All right. What has also happened is that there was a zone of supply here at one point that price broke through. All right. So now it's a broken, order block. The deal is, you want to make note what caused the break. What was the demand that caused that break? And that demand is identified. Yeah. All right. And what does that mean? This becomes a flip zone, a supply and demand flip zone. It goes from supply to demand. Easy to follow, right? All right. And why is that significant? Because it tells you who's in control. You can point directly at the point in which sellers lost control, relinquished control to buyers. All right. Demand is in control now. You understand? Hope you can follow that, because you should be able to, because that's important to note. Now, does price have to come all the way back down here? No, it doesn't. All right. But we want to note that there is imbalance to come and fill. All right. We want to note that this was the last reaction here. This was the last reaction to the supply here, which was in control before it lost control to the demand, right? And we also want to look for a place that price could come to that hasn't been mitigated yet. There is a wick down into this demand zone here. All right. So we know that this was already mitigated, but the demand in this wick has not been. So I want to make note of that. And we can also make note that we have a chain starting, a demand chain, a chain of demand, better to say, starting here. So if price does come back down, if price does retrace, I'm looking for it to come here. I'm looking for it to pop here. I'll put a little eye on that. All right, I'm looking forward to pop here, and we'll see, if it even makes it down that far, because there's a lot of momentum. You have to make note of the character of the price action. A lot of movement, a lot of momentum to the upside. So if price does come down, I'm looking forward to do something like this here. All right. Why are you driving me nuts? Okay, let's cancel that. All right, so that's the lesson on this little day chart here. All right, hope you can keep up with that. We're still bullish. All right, but I'm expecting, after an impulse, a correction, and then another impulse. All right, bearing in mind that we have bullish momentum to the upside. All right, and that we have reached a mitigation point. Okay, now let me grab this before we go down. I mean, for matter of fact, grab that there. No, okay. Let's go to the 4 hour. And this is where I live. All right, what do I see with the 4 hour? We have a higher high, a higher low, a higher high, breaking that high into this mitigation point of the higher time frame. All right, I get this out of here. I believe, yeah, let me get this out of here right there. All right, so we've already refined that daily order block, right? But what do I want you to see? What I want you to see is the refinement. Wow, where did we go? Okay, what I want you to see is the refinement to the 4 hour. There's a 4 hour zone of supply within the daily supply that we already marked. Okay, bear in mind we still have this the relative equal highs up here that's going to act like a magnet to price. All right, but if we come back over to the 4 hour, area of contact where prices are reacting to, we can see that price is had a very nice bearish reaction, but this is the impulse that broke the last high made. Impulse, correction, impulse, correction. What are we expecting from here? A new higher high, right? That is the expectational order flow here. It's bullish, and after a correction, you expect another impulse. Now, does that necessarily have to happen here? No, because we are at a higher time frame point of mitigation. We are at a higher time frame supply. So we could very well get this at, wow, let's try this one. We can very well get a higher high, like so, a break of structure, and then that, we can get a head and shoulders. We can get that. We can get a quasi, a Quasimodo. We can get that. All right, but this happens at major structural points, major supply and demand zones. All right. In this case, this is at a supply zone, right? So this is something that we have to be careful of. What I want you to note is that high is a zone for liquidity. All right, we've already broken that high. We already broke that high to the upside. We had a return to impulse, and this is the next expectation, price to go higher. All right, but we have to bear in mind that there may be a change here. So what we'll be looking for at every zone, that every higher time frame zone of supply, in this case, what we'll be looking for is a change of character, and we'll look for that on the lower time frames. Okay. Now, let me get down to the where we can see the price action very clearly. All right. We have our 4 hour. We have our daily. All right. We see that we came up into the daily. We see that we came all the way up, but didn't quite touch that 4 hour. Didn't quite touch the 4 hour yet. That becomes the relevant zone for me. Okay. I want you to look at this very closely, because this is going to be telling. Let me use this. All right. So why do I have a blue line here and a yellow line here? We're looking for strong highs, strong lows, weak highs, weak lows. What does this mean? All right. This is a strong low. Why? Because it had broken the old high. That is the only job of a low, to break the high. The only job of a high is to break the low. It did its job. So this becomes a tradable zone if price should come back here. You understand? We're going to expect some kind of reaction, and maybe a very strong one. All right. Especially the fact that it's unmitigated. Okay. Now, moving on from that, why does this one have a yellow line? Because it's weak. Why is it weak? Did it make a new low? Did it crack this low? No, it did not do its job. So what happens with weak highs? Weak highs become targets for liquidity. I already have a reason that price may break that high. Why? What is that reason? Remember, all the way to the left, we have relative equal highs at the top of the daily and weekly supply zone, which this 4 hour is inside of. Okay, remember that. All right, and we've already mitigated the daily. We already mitigated the weekly supply, if you remember, twice. All right, now we're coming up to mitigate the 4 hour. All right, now I also want you to watch out for, just keep those things in mind. All right, what I want you to watch out for is a change of character. What is the change of character? Price comes to a mitigation point. All of these candles are in are part of the up move. Why? Because they break the high of the previous candle, except here. All right. So we make a note here. All right. When price, this is a pullback. Price pulls back here. Boom. All right. Price continues up higher and then breaks that low. We have a change of character. Price is giving us an early warning sign that price may be shifting from bullish momentum to bearish momentum. Easy to follow, right? Okay, so price does pull back, but are we going to continue higher past this low, past that low? Well, there's a couple of things to look out for. One, this is a liquidity point. Two, all right, we have a weak low. All right, why? Because it didn't make a new high. All right, we have the bullish the bullish zone of demand here that actually took out a zone of supply. This is very telling. All right, this is very telling. Remember what we just went over? Well, guess what? It happens on every time frame because price is what? Fractal. All right, you see that there was a zone of supply here. Price had a very nice bearish momentum once it made that supply zone, right? All right, breaking this low here. All right, but what happens? What happens? I always look for these things because they're important. Price comes up to it, smashes through it, all right, comes back. And once it smashes through it, what am I looking for? I'm looking for the zone, the demand zone that broke that zone of supply. And that would be down here. All right. All right. Price comes down, mitigates it here. And we have sideways action. This is price putting together orders, generating orders. All right. In this consolidative range. All right. What I'm going to be looking for is this move. Why? Because you see this impulse, this correction. I'm looking for this impulse to happen again because the higher time frames are bullish. All right, we've cracked a zone of supply, and the demand has held so far. We've come down to mitigate that zone of demand, and there's still, we haven't come to the median threshold of the of this order block. So we can come down here and test again. We can come down here and test again, but I'm looking to see if we will target the week high for liquidity and finally mitigate this 4-hour zone here, where we may find another change of character. Okay, that's my my logic. Could price come past this low? Could it break this zone of demand? Sure it could. Sure it could. But because of the flip here, I'm looking more towards a bullish response. I hope that makes sense, because it seems to make sense to me with just going with the order flow, which has been bullish since the higher time frames. Okay, I will see you in the next video. I hope that you found this video beneficial. If you did, please make sure you tap that like button. You don't have to smash it, just tap it. Just click on it, will you? And subscribe so you can catch my updates. I'm leaving a video, 2 videos for you to check out so you can learn more of how I view the markets and trade safely. And thank you for spending some time with me.